my name's Adam Vanderplug. My background is in credit. I've been on underwriting teams with PayPal, but also startups that have provided things like invoice financing and revenue-based financing. And my background particularly dives into distressed credits, both net originations and portfolio management, and then also building credit models and credit policy. So I came onto Codat a few months ago, and the reason that I came on is because there's such a unique opportunity to merge the data that Codat provides with the underwriting decisioning that is typically provided by credit professionals. And so what this looks like is taking some of the general themes of credit models and credit decisions and merging that with the data that Codat's able to get. And all of a sudden that you do have a really interesting pairing to be able to drive deeper insights than what you could get with just your own data. One of the things in particular that I think is really interesting is you had mentioned, there are obviously quite a few startup lenders that are coming into the space. And a lot of these startup lenders might not necessarily know how to build things like a credit model or how they should be weighting things into a credit score. And because Codat does have so much data surrounding the financials of companies and how those perform over time, you can get deep insights into the correlations between certain financial metrics and their probability of default. And that's a unique offering that Codat can have that you couldn't necessarily get without something like Codat. Codat is obviously going to have a plethora of a variety of different companies and a variety of different industries, and that can best serve people to understand what's truly a leading indicator of default and what's going to drive performance into the future. So the holy grail of financial metrics in credit decisioning is going to be cash runway, especially as you are working more on the fintech lending side, because typically you're working with a lot of startups or SMB companies that don't necessarily have profitable operations at that point, or aren't well established enough, and they're going to be burning cash. And so to be able to mitigate that risk, you want to understand a company's cash runway and how much cash they have on the balance sheet. And so by assessing things like their financial data or like their banking data, you can come up with a good assumption on how long that company could theoretically continue operating and if they're going to be able to pay you back. I think my biggest piece of advice to lenders looking to improve their underwriting process is to make sure that they're truly underwriting to their product. When you are looking at something like a 5-year term loan versus something that's like a 3-month cash advance, those are very different types of underwriting styles. And when you're looking at something like a merchant cash advance, that's typically much shorter in duration. A company might not be profitable, or the company might not have stable revenues at this point. But so long as they can continue operations for that duration, and so that they can have the longevity to be able to pay you back, that's enough to enter into even just a short-term relationship with them, help them scale, help them grow, and provide a short-term need, even if you think it might be unpredictable that it could be a long-lasting relationship. One benefit to Codat that you can't get with things like accounting data or banking data is being able to pull customer invoices and customer bills. So when you link into the accounting platform of a company, then you also get insight into their invoice and bill history. When you do that, you can start to gather really valuable insights, like what their terms are with their vendors, how often they're repaying those vendors, and what percentage of those payments that they're making to vendors are on time versus late. So that's a really valuable insight, because now all of a sudden, rather than having to rely on traditional financial metrics like days payable outstanding, where you're making an estimation on payment history, you actually get the payment history. You can actually see what percentage of payments have been made on time, and if those were late, you can now understand by how much. And that's something that you can't get when you're only looking at accounting data versus banking data that you can get with Codat. In terms of making underwriting more efficient, and this is something that I've always been taught, is to always focus on like the need to haves versus the nice to haves. So the need to haves are the things that you absolutely need to make the decision, whereas the nice to haves, would be it would be good information to include in your review, but they aren't necessarily going to be the drivers towards making decisions. And when you can be able to like discern that and understand the difference between those two, it can make underwriting just much more efficient, because you're now focused on the things that truly matter versus the things that might be just fluff. If I was trying to start a brand new capital product, the thing that I would prioritize is a really good credit process right up front. Where I've seen credit processes fail is people tend to want to drive revenue quickly, and that can sometimes come at the cost of bringing on bad loans or bad borrowers, and that ends up burning you later. So when you start a brand new capital product, being able to come up with a good credit model and a really strong credit policy, and have good like standard sets of operations when you're starting up that credit program, making sure that you have a good policy for originations and also a policy for portfolio management to make sure that that book is fully secure and continues to be protected, so that you don't end up, continuing to grow and then all of a sudden it comes to a halt because a past decision that you made ended up burning you, and now all of a sudden you can't continue lending in the future.